Turning our attention now to the local front, we had retail sales out yesterday and coming in better than expected, contracting by 3.9%. The previous reading was a contraction of 6.7%, and this is really proof that we are seeing the consumer benefiting from the interest rate cuts we've been seeing over the last few months.
Yeah, absolutely. So the consumer's been sitting on the sideline for a little bit, deleveraging, paying down debt, getting comfortable with where they are, now starting to spend again. And Christmas couldn't come at a better time on the calendar for these retailers, to be perfectly honest, because it's just showing signs of recovery. I guess you've got to see September, October figures just suggest that we are in this kind of recovery mode, but pleasing.
MPC decision today as well, and obviously they're going to be taking these retail sales numbers into consideration. We've also got those key CPI figures. What do you suspect that they'll probably be doing? Many say that we'll just see rates be kept on hold, and that will probably be the wise thing to do.
Yeah, probably a wait and see approach. Have a look, see if inflation is starting to ease a little bit more. The strength of the rand has been really helpful to imported inflation. And the fundamentals for the rand look a little bit better than they have in a long time. So, there's been a lot of talk about what is the right level for the currency. To be perfectly honest, it is what it is as it's traded in the market. I'm a firm believer in the market always gets it right. So I think, the MPC will probably wait for a couple more reads on inflation, and then it might be Jill Marcus to do a one and done type scenario. To bring rates to, because I've heard economists suggest that you can't lower the rate below the inflation rate because it's just a credibility issue, and we're quite close to that.
We are quite close to that, and many say maybe we will see a 50 basis point cut because that will in fact weaken the rand, and we know that the Reserve Bank has a very close eye on that rand, and they're just worried about the levels that it's been reaching lately.
Yeah, I guess the flip side is they could, they could be accumulating dollars at these levels and selling rands. It's interesting because if you want to artificially play in the currency market as a central bank, you're leaving yourself exposed to many different scenarios, and there are lots of central banks that have tried to play in that space. Some African ones not so much success. I know the Nigerian central bank tried their damnness to be able to weaken the naira. But they didn't get that right. So I'm not entirely sure whether or not the Reserve Bank wants to be playing in that space.
CPI, when do you think that we'll actually breach that target band of 3 to 6%? And do you think that we could sustain a move into that space?
Yeah, I guess it all depends on the wild fluctuations that we saw in the past were a lot to do with currency flows. So if we can get into a market that's a little bit more stable, and if we can be in a space where perhaps the flows are more predictable, then I guess the Reserve Bank would have a better idea of where to get, because let's not forget we've been through some rather wild times in terms of the currency and the oil price only in the last 12 to 15 months. So I guess to have gone out of it wildly, and we've been out of it for a very long time, so it's just a notional target really, although you do want to get back inside that band. The Reserve Bank would obviously desperately want to see it inside that 3 to 6 range. To be perfectly honest, I don't have a forecast.
Retail sales, we know that it's bottomed out. Another index that you look to for signs that we are in fact on a path to recovery in South Africa is the Mooi River Index. Could you give us some insight into that?
Yeah, I've got some clients who are on the edge of the Mooi River Plaza and sit just off the toll, and they ask the people at the toll to send them monthly data, and then they put it in a nice graph and send it to me, and I can put it on telly. It's just showing a sign again. I think you've got to look at the far right bar just to be able to see that it's increasing and it's at levels that I guess you saw a couple of years ago. I think the other graph is a better representation of where we are right now. But yeah, again, signs that we're bottoming out and we're getting to a level that I guess everyone's more comfortable. There's trade. What this index actually is a measure of all the big trucks, the trucks with 5 axles or more, up and down. I've got some other data from the port which I want to put together. It's a 2-year graph, and I just want to see the trend over the last 6 months if it's similar.
Well, you've obviously looked at some of the data. Is it showing signs of recovery there as well?
It is. I mean, and the data itself is astonishing because it again suggests that we're a bulk exporter by a factor of 3 as is to 1 in terms of imports. So I'll have a look at it and I'll send you the graphical representation, and perhaps we can talk about it next time.
Great. Next time we'll definitely have you on, Sasha, and just taking a look at that graph. But lastly, are you comfortable in saying that South Africa is definitely showing positive signs at this stage? Are you confident that from here onwards, economic recovery is well underway, and of course that's going to feed through into company earnings and of course into the equity markets as well?
I think what many people forget is that companies become very efficient in these times. You know, the staff layoffs, the cost cutting, and that when eventually you see top line growth, because they're so efficient, perhaps they beat analysts' recommendations on the upside. And then I just wanted to add something, because you said the Dow last crossed 10,000 in October last year. It first crossed 10,000 in 1998. So I think people get a little bit too ahead of themselves in terms of valuations and where levels are at. Because to be perfectly honest, if you'd been tracking the Dow for the last 11 years, you've made nothing.